Hey, welcome back. So there is one pattern on the Bitcoin chart right now that is going to decide everything. Either we drop to 71k or we push to 100,000 US dollars. And I mean that literally the pattern has two very specific targets, and right now we are sitting right in the middle of it. I want to show exactly what this pattern is, what each outcome looks like on the chart, and what the data is telling us about which direction is more likely. And there is a whale trader right now who has bet $81 million that we go to 71. They are currently down $13 million and still holding. Their positions get wiped at $100,810. This pattern decides their fate too, so let's get into it. And I want to show you three signals that tell you which way this pattern is leaning right now. One of them surprised me, so please stay with me. Okay, the pattern. This is the most important thing on this chart right now. Let me walk you through it step by step. First, the two blue lines. Quick orientation, the bottom blue line at 68k is the 200-week EMA, Bitcoin's long-term price average over 4 years. It has held as a floor through every major crash, well below us, and that is good. The top blue line at 82k is the 200-day EMA, the average price over the last 200 days. Right now, it's the ceiling. Bitcoin has been rejected here twice. This is where the pattern matters most. Now, the rising wedge. Here's what this is in plain English. Price keeps making higher lows. Each dip stops higher than the last. That looks bullish, but at the same time, the highs aren't getting much higher. The range between the tops and the bottoms keeps shrinking, like two walls slowly closing in. When that happens, pressure builds, and eventually price has to pick a direction. Rising wedges almost always break downward. When they break, you measure the height of the wedge and its widest point and project that distance below the breakdown. That gives you the target, in this case $71,500. That is scenario 1. But here's scenario 2. If Bitcoin breaks above the upper boundary of this wedge and closes above the 200-day EMA at 82k, the pattern flips. That becomes support instead of resistance, and the next targets are 85k and then 100,000 USD. The RSI, on the other hand, the momentum indicator, sits at 50 to 55. Think of it as a gauge from 0 to 100. Above 70 means overbought, below 30 means oversold. At 50 to 55, we're neutral, no momentum advantage to either side right now. The Ishimoku cloud, another indicator on the chart. All you need to know is this. In the entire 2022 bear market, Bitcoin never closed a single day above this cloud. Every time it tried, it got rejected. Right now, Bitcoin sits comfortably above the cloud. This pattern is forming in a completely different structural environment than the last bear market. So the pattern is clear, 71,500 or 100,000, the wedge decides. Now, the whale who has bet $81 billion on 71k, let me tell you exactly what their position looks like, because if they are wrong, it gets very interesting. And if you want to trade around levels like this, I use Bitunix, by the way. No KYC, that means no complicated ID verification. Deposit takes 2 minutes, link is in the description and pinned in the comments. Get set up before this market moves. Here's the whale and why they matter on the pattern. A trader called Pension USDT ETH opened a short on 1,000 Bitcoin at $67,990. Total exposure, $81 million. With 3x leverage, quick explanation of the leverage, by the way. With 3x, you control 3 times more than you actually put in. The gains are bigger, but so are the losses. And if price moves too far against you, your position gets automatically closed at a loss. That is called liquidation. Bitcoin moved from $67,990 to $79,731. The position is down $13 million. They confirm publicly, still short, still think 71,500 is coming, still believe the wedge breaks down. Their track record is real, 20 straight wins before this, 85% win rate. This is not a random bet, this is a calculated position based on the same pattern I just showed you. But here is the problem. Their position gets wiped at $100,810. That means if the bull case plays out and Bitcoin reaches 100k, this trader loses everything on this position. And Kalshi, a regulated prediction market where people bet real money, gives a 50% probability of Bitcoin hitting 100,000 this year. The pattern decides the whale's fate as much as it decides yours. 71,500 they win, 100,000 they get wiped. Now, ETF outflows today hit $630 million, biggest single day in weeks. ETFs are products that let traditional investors buy Bitcoin without holding it. Outflows mean institutional selling that adds pressure to the downside. I won't ignore it. But total ETF assets are still $107 billion. The big picture is intact actually. So which way does the pattern break? Here are 3 signals that tell you where the weight of evidence sits right now. STRC is Strategy's preferred stock, a special type of share that pays a fixed dividend. When STRC trades above $100, Strategy can sell these shares to raise fresh cash, and almost all of that cash goes straight into Bitcoin. When STRC is below $100, the engine stalls. It just reclaimed $100 this week. That unlocks buying power for at least 3,127 Bitcoin this week alone. To put that in context, that's 235% of the entire amount of new Bitcoin mined this week. One company buying more than twice the new supply. And there is signal too. Stablecoin dominance measures what percentage of the total crypto market is sitting in digital dollars like USDT and USDC. When people are scared, they move to stablecoins. When they get confident, they rotate back into Bitcoin. Right now, the stablecoin dominance percentage is hitting a resistance zone, the same level where it topped in previous cycles before Bitcoin rallied significantly. Capital is sitting in digital dollars. When it rotates, Bitcoin is the first destination. Signal 3, Arthur Hayes says 126k is a foregone conclusion. Hayes is the founder of BitMEX and runs a crypto investment fund. He published this week that both the US and China are printing money to fund the AI arms race and the Iran war. More money printed means each dollar is worth less, and when dollars are worth less, scarce assets like Bitcoin benefit. He pointed out that since February 28th, Bitcoin is up 31%, gold is up 2% in the same period, Bitcoin is outperforming. His target is 126,000 US dollars, and he says that the rally gets explosive when it clears 90k. So here's my honest take and why I think the whale being short might actually be the best news for Bitcoin bulls right now. And by the way, Bitunix is where I trade. No KYC, fast deposit. Link is in the description and pinned in the comments, by the way. And here's where I stand, and I will connect it directly back to the pattern. The rising wedge gives us 2 targets: $71,500 if it breaks down, $100,000 path if it breaks up. 3 signals: STRC buying 135% of weekly supply, stablecoin dominance topping, Bitcoin outperforming gold by 29 percentage points since February, all lean toward the upper break. But the wedge hasn't confirmed yet. The 200-day EMA at 82k hasn't been cleared. I don't trade the prediction, I trade the confirmation. And here's why the whale makes the bull case stronger. If Bitcoin breaks above 82k, the whale faces 2 choices: close the position and accept the $13 million loss. That means buying back the Bitcoin they borrowed and sold, or hold and risk full liquidation at $100,810. That means the exchange forcibly buys the Bitcoin back automatically. Both choices create buying pressure above 82k. The whale being trapped is fuel for the wedge to break upward. My plan is simple: clean daily close above 82k, I add. The wedge breaks down to 71,500, I add more there. The pattern tells me which, I don't need to guess. $71,500 wedge breaks down, bears win, whale profits, I add. $100,000 whale gets liquidated, bulls win, pattern confirms. 82,000, the line that decides which story gets written. Let me know what you think in the comments, by the way. Thank you so much for watching, and I will talk to you guys in the next video.